The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 2nd magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of the bulls and the bears, the buyers and the sellers. We're going to go figure out what they are communicating to you and I just past 1 o'clock in the afternoon on this magnificent Monday. I want you to know that I'm absolutely grateful for your presence, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in anytime at 877-927-6648. Of course, internationally, 727-445-1044. We'd love to hear from you, of course, inside the Tiger's Den. You can just ping me at any time, and you can also send me an email, steve@tfnn.com. I'll do my best to get to any requests that are out there. So hope everyone out there had a great week. And let's get this show kick-started out here on this magnificent and magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading up 81 points. She's trading at 17,854. S&P's up 9 points at 2075. NASDAQ Composite up 11 points at 4786. Russell 2000 is up 4 points. She's trading 1134. You've got gold up $5. Silver's back 11 pennies. Light sweet crude off $1.14. Leading the charge here to the upside, dollar-wise, you've got Amazon up nearly $20. That's up 3%. AutoZone up nearly $8. That's 1%. Chipotle up about 2%, about $7. Charter Communications is up $6, nearly 3%. Starwood Hotel and Resort, they're up 8%. That's $6. To the downside, is it Baidu? Let me see here if I've got the right thing. Baidu is the leader to the downside. I didn't say that surprisingly. I just wanted to make sure I had my system positioned properly. That's off $15, about 7.5%. Pacira Pharmaceuticals, that's off 8%, a little more than 8%, $4.50. Biogen down $4. Haemonetics. Pretty sure I blew the pronunciation of that. HAA, they ain't making any hay today. They're down 11.5% off about $4 to the downside. So it is our first day of May, selling May. Oh, wait a minute here. The market is moving to the upside. Let's go take a look at the last several years with regard to the first trading day, first few trading days of May, and see what they have presented to us. So let's go back to next one would be May of 2015, right? So let's go figure out where May of 2015 is on this chart. We got July 2015. Come on, there we go. Work with us. We're doing live show out here. Here we go. So May 1st. Where's May 1st? Right? Or the first trading day, I should say, of May, happened to be May 1st. And May 1st, so that's right here. We should probably draw an arrow. Might be easier for everybody watching on TigerTV. So let's get an arrow. Well, let's just make this, not for any purpose. Let's make it a blue arrow. A blue arrow out here. So the first trading day in May, right here, blue arrow. There we go. Whoops. Yeah. Geez, you think I could draw a straight line out here? I didn't actually have to draw it. I could draw a straight arrow. There we go. Now we've got a straight arrow, right? So May 1st here, sell in May. Not so fast. Certainly last year we saw the market move up and didn't form its high until May 19th or May 20th. Let's see, which day? I think it was May. Well, I don't remember which day. May 19th was 18,351 and 18,350. Yeah, so it was May 19th. So there goes your sell on the first day of May theory, at least in 2015. Blue arrows, we'll just keep them in on this chart out here. Let's go to May of 2014 and see what that brought to us. Let's go ahead and get that arrow out here. So the first trading session in May of 2000 also happened to be May the 1st. We'll go ahead and draw this to the, oops. Why didn't that work out there? So we got May 1st. Here we go. There's your arrow. And you actually saw the market move lower for about 3 or 4 days. And in essence, never took out the lows here from May 7th. Market didn't make its summertime top until July 17th is what it looks like. Yeah, about July 17th. And then we saw the markets move lower down into the August and obviously truly move lower back into that October time frame, right? So there is 2,000. Now, 2 years don't make a very, very good sample size, and neither do 3, but we're going to go ahead and take a look at that third year. So now we're into 2013. Here's May of 2013. Let's go grab that arrow key. Here's May of 2013. And what we could see was there was just selling on that one day, and that was basically about it. Market moved higher into May 22nd, all right? May 28th. Out there. Those were the 2 dates. Let's go back one more year. I guess the whole thing is that you're getting the point. What point is it that I'm making? Well, the old sell in May, it does not necessarily mean sell on the first trading day of May, or at least it most certainly hasn't in the recent past. There are times where in May, in fact, in the first trading day of May, that we have seen the market go ahead and sell off. So where is May 1st? The first trading day, May. Here we go. Here's May 1st. So how about that? You'd almost think that I had that planned, which, by the way, I did not. Things happen for us. How about that? So here's May 1st of 2012, and the market began selling down really the next trading day. I mean, the actual high came in on May 1st, and then from there, the market proceeded lower into the beginning of June out here. Okay, so what does all that mean? Well, the first thing was just simply to lay to rest the very cute rhyme out there about sell in May and go away out here, and the 6-month unfavorable seasonal cycle that we're in. So what does all that have to do about where we're at right now today? Well, you got the market moving higher today. Let's go take a look at patterns. What's it really all about? Well, it's really all about patterns, right? You know, what's happening at that same point in time during these cycles out here? Well, I wasn't with you on Friday. I was out of town on Friday out here. And as we take a look at what actually took place on Friday, and we're only looking at the Dow as we speak right now. And as we take a look at the Dow, do you see what candle formed right here on Friday? Most of you already know that. You know that that's one of your favorite candles, right? That's the Stevie Hammer candle. That's when a market tries to hammer out a bottom, which it was doing on, obviously, April 29th out here. Now, it was doing more than that. And the reason why we're focused on the Dow here is because I do believe that from the Dow is where we're going to get the most important next signal, whatever signal that may be. Now, for those of you that are in the listening audience that are Gartley aficionados, you might say, well, what the heck is a Gartley out there? And what a Gartley is, if you take a look at a great book that HM, what's the H stand for out there? What's the M stand for out there? Harry Miller Gartley? I don't know. I ought to know. But H.M. Gartley produced a book back in the 30s out there. The price of the book was like paying for a brand new Ford truck. Yeah, that's really what the cost of the today an F-150 is. Costs you quite a few pennies out there. So he had some really great patterns that were inside there, and we'll take a look at one of those patterns that's attributable to HM. We have to look at see what his actual name is out there. That had A to B equals CD to the downside that you would buy when you've missed a first huge move. There was a huge move coming off of those February lows out there, was there not? First A to B equals CD to the downside completed on Friday. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 91. S&P is up 11 points. So before we went to that break, we were taking a look at the Dow. We were looking at the sell in May, whether or not that's really a more of a fallacy, at least selling on the first trading day of the year out here. And I don't know what conclusion we draw. The conclusion we drew there was not necessarily. We're taking a look at suggesting that patterns are the most important thing out here. We looked at the Dow. We're looking at the Dow right now. Friday's candle session was a hammer candle. So that says that the low of Friday is really important to be paying attention to. By the way, that price point for that low is priced out at 17,651.98. Now, when we take a look at this move up here, we were also talking about how that actually confirmed a Gartley buy pattern. So there is a absolute 100% with certainty Gartley buy pattern that is confirmed and present inside of the Dow. And if you take a look at page 222 in HM's book, and I still don't know what HM stands for. I tried to do a quick Google search out there, but I couldn't find it. Maybe you know that, and you'll get that. You'll send me an email or post something in the den or something like that. But here's what you need to know, right? Big move off of the bottom out here in February. Big, huge move to the upside. There is no A to B in what's required in order to have a Gartley. Buy or sell. In this case here would be a buy pattern. You've got to have an A to B equals CD. In this case here would be to the downside. Well, that first pattern, that first A to B equals CD, this is a daily chart that we're looking at, actually completed last week on Friday. It completed with that move down. It was about a 1 to 1.272, as you'll see, just slightly more than that. A to B equals CD. Someone says Harold McKinley. Is that really the case out there? Well, thank you, guys and gals out there. Harold. So let's HM Gartley or the Harold McKinley Gartley buy pattern out there. In any event, let's stick. I like HM. No wonder he produced the book under HM. So here's your A to B equals CD to the downside. That completed. The first one on a daily chart inside the Dow. Now I say completed because the question is, in HM's book you'll see he just has the drawing of a to B equals CD. He didn't even call it an A to B equals CD pattern out here. And if we take a look at that, the question begs the pattern begs the question. Well, how do you know when it's complete? It's very simple. In this case here, the bulls have to tell you that it's complete. In a Gartley sell pattern, the bears have to tell you that it's complete. In this case here, what you had on Friday was you had a hammer candle. And today it's being followed up with a bull sash. So we know that the bulls are protecting the lows of Friday, and that says those lows of Friday are very important, whether you're a bull or a bear inside of the market out here. So if we take a look at what does this mean? Well, a valid buy pattern out here, which is what you have, has 5 different outcomes. What could those outcomes be? Well, those outcomes, let's go take a look at least a few of them. Let's look at the retracement outcomes out here. So we'll go switch here. Your retracement outcomes are nothing more than of that pattern, your 0.382, your 0.618, your 0.786, and then your uno to uno, your 1 to 1 A to B equals CD, which also is referred to as a move of a move out here. That's getting back to the prior swing point. Well, from the lows, here's what we know right now. So from the lows of Friday to where price is at right now, if the Dow is going to close above 17,848, we're not talking by a penny or two out here, but if it's to close above that level, this says that the Dow ought to make a run. This is the cash industry we're looking for the 17,970 level. That would be outcome number 2. Doesn't have to stop there. Doesn't have to get there either, but doesn't have to stop there. If price can get above that level, then outcome number 3, that's your 0.786 retracement. And outcome number 4 is what? Outcome number 4 is that it gets all the way back to the previous swing point to 18,176. At this stage of the game, do we know what that outcome is going to be of this pattern? And the answer is no. And there is that 5th outcome, which is just simply forms a new A to B equals CD to the upside. The small one, the very small one out here, looks like this. You know, at least with regard to potential price, you'd have to say, where do you want to come back to? Well, I'll just come back to the really conservative one, and that would be right there as your A point. By the way, when I say right there, I'm referring to April 7. Your B point out here is the high on the 20th. Your C point out here is the low on April 29th. That takes you up into the 18,335 type range out there. Now, I believe at 18,335, if in fact that were to be the outcome, that gets you all the way back or very close to the previous high, the all-time high of 18,351. So it's 18,335 is a number out there. Now, do we have enough information from this to tell us whether that is going to be the outcome? Now, it was only in the Dow. There are no other, well, I take that back. There is one other A to B equal, there's one other Gartley buy pattern that confirmed out here on Friday, and that was in the Wilshire 5000. Let's just go take a look at that, and then we'll come back to the Dow so that we can complete it up, because we want to go take a look at the futures contract. You see here, here's the hammer candle inside of the Wilshire 5000. You can see it almost looks like we're looking at the Dow out here, right? But no, and here's your A to B equals CD. Here's your A point out here from the April 20th, your B point April 25th, your C point out here looks like April 27th. There's your 1 to, in this case here, we'll call it the 1 to 1.618 A to B equals CD. So you want to pay attention to that. But those are the only 2 Gartley patterns that form that I could see on a daily chart of all of the indices out here. And when I say complete, because, well, one, you need to have the bulls show up. You need to have those, you need to have the, you need to have a confirmation of a pattern out here to either side of the trade. Now, so what's the next thing that we can look at? Well, we ought to go look at the advanced decline oscillator out here inside of the Dow, see where we're at right now. And where we're at right now, we're still below the 0 line. You can see that reading of minus 0.66. So that says, yeah, you got a nice bullish reversal pattern, but you're not out of the woods. To get out of the woods, you've got to get a move above the 0 level. What's it going to take the rest of the day in order to get up there? You know, I don't know the number of net additional advancing issues out there, but we're not above 0 is what we're going to say. So it's not out of the woods just yet, but that does not mean that it can't get out of the woods. You've got nice reversal patterns inside of the Dow. So that says we ought to go take a look at the futures market. That says to Steve-O, we ought to go take a look at the futures market. So let's start off by taking a look at the 30-minute chart out here. Now, off of the bottom that formed Friday, here's what you and I know. Price was moving lower, doing it with less relative weakness out here, right? As the market, as it seemed like the sky was falling, as the rubber band was being stretched, all of a sudden, you had the cavalry show up at 12 noon. What did it form out here? There are no coincidences, right? Everything happens for you, not to you. And voila, you've got another hammer candle. that formed inside of the Dow on the 30-minute chart. Now, up until we came on the air, price had moved higher off of that low, and right at the time frame of about 11:30 this morning, not exactly at 11:30, but during that candle session that ended at 11:30, there was an intraday high that ended up giving us that seventh inning stretch, that seventh inning move to the upside, and guess what? That was taken out while I've been blabbering for the last few minutes out here, taking a look at these patterns that you and I need to pay attention to. And normally in a weak market out here, you wouldn't see this get beyond number 7. So what does this say to me? This says to me that the Dow futures contract still wants higher price out here. Now, where's the next likely target that's going to provide us with some information? Well, that's pretty easy out here, because as you take a look at the chart, you can see where things really began to fall apart, and that was at about 3:30 in the afternoon, and that was right here at this candle session, and that price point is about 17,842. We're at 17,789. That's another 50, 60 points to the upside. We ought to see that at least inside of the Dow. See Rhodes from TFNN. Right.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So what we determined thus far, we had active, we had an HM Gartley buy pattern that confirmed on Friday, both in the Wilshire 5000 as well as the Dow. We anticipate at this stage here that the Dow is going to move higher in the cash indice. The target becomes the 17,970 level out there. That is outcome number 2 of a Gartley buy pattern. That could be the extent of the move. We don't know. We'll have to take a look at other patterns that are going on as the Dow. But you should anticipate, you should expect that that's what the Dow is going to do. We took a look at the futures contract. We see that great wall of worry out there. That's that wide-ranging bar to the downside. That took place at 15:30. So 15:30, that would make it 3:30 in the afternoon out there through that close. By the way, that was on the trading day of April 28th. You're trading into that bar as long as price can close above its current market profile and they continue to form at higher levels out there. We should anticipate in that 17,840-ish area inside of the futures contract. So now the futures contract may complete its pattern before the cash indice does out here because we're trading all night long. We've got Europe, we've got Asia to contend with, but I would anticipate that that's what the move is likely going to be. We can also take a look at the VIX index right now, which is dealing with the S&P 500, not the Dow. But as we take a look at that right now, what we can see here is this is set up for markets to move higher. Price tested the 50-day exponential moving average. Right now, it's priced at 1587. It rejected that level, tested and rejected that level on Friday. That sets up for the markets to move higher with the VIX pulling back out here. So there's another piece of information. We've got a Warren in Denver sent an email. Now, his email is really talking about a number of different things with regard to U.S. Treasuries involving Saudi Arabia, China, and many other items out there. But to summarize it for our technical charting purposes out here, I believe the real question is, or there's a couple, right? When will Treasury, how long can bonds go up, stocks go down? How long can that trend last? All right, so there's a presumption that there is a trend out there that we need to pay attention to. It's a good presumption, but let's go take a look at it. So the top portion of this chart that you're looking at out here right now happens to be, now this is the continuous contract, both for the S&P futures, which is down below, and that way we have plenty of data that we can look at, and that's the bottom portion of the chart is the S&P futures contract, the S&P. The upper portion is the 30-year Treasury continuous contract out here. Now, the blue line, the reason I've got it as a line, which is really the closing price on that trading day. It's much easier to see whether there is this directional correlation. Does it always have to be present out here? Because the question was, how long can the bond up, stock down trend? Now, what I've done here, by the way, is I've inverted, not converted, but I've inverted the ES Mini. That way, we can take a look at that correlation that Warren is talking about so that it just makes it easier for us to look at. So I've really inverted the ES Mini so that way, from the correlation, we should see the lines really moving in the same direction. We can see that for the most part, and I say only the most part, that, Warren's correct. You see some type of correlation, but we can see here that correlation comes unhinged here. If you're just following my crosshair out here, here's where at the bottom, the ES Mini, makes a high. Okay, remember this is converted, right, or inverted out here. So let me just keep on the same language as this, right, with regard to highs and lows, so that they're the same simultaneously out there. You got to like that word, simultaneous. And as we take a look at it, you can see where the correlation it's there, but it's not always there. So what does this say? This says we really ought to. You can see a dominating directional feature out here, but certainly not day to day. Any more than light sweet crude, which is starting to come maybe a little bit uncorrelated. The question, though, of how long can that trend last, I don't know. I think what we have to do is just take a look at, you can understand an influencing factor out here, but then you also have to maybe discount that influencing factor, and just play the pattern of what it is that you're looking at. Now, that also then presumes, so let's just say you're not in that camp, and you say, Steve, you're all full of BS out there, and that you are convinced that there is that correlation that you have to pay attention to. Okay. let's go take a look at that. So then what does that mean out here? That means we have to go take a look at the 30-year Treasury to see what is its message out here. Well, let's go take a look at this daily chart. We talked about this at some point in time last week out here. We talked about you're looking at you're looking at a number of squiggly lines on my chart out here, but you're looking at the red, green, and blue as we speak right now. And when those lines intersect out here, they provide you and I with a really important piece of information. Now, typically, as those lines are starting to intersect out there, how do you like that with the I don't know if Steve-O in the control room was getting that intersection of my fingers out there. And that's a good gesture, by the way. But when that intersect is happening, usually you'll see price. Maybe it's going to continue on, or it's going to pull back. They both have different meanings out here. And back here is what I'm taking a look at back in the January 8th time frame. As those lines were beginning to intersect, price came back and tested that level, just like the VIX index testing its 50-day exponential moving average. That's not what this is here, but the same kind of concept, right? Tests and rejects. In this case here, price pulled back into that level. That was testing a level of support, continued moving higher until it made that little shooting star out here in the trading day of February 11th. Now, fast forward to where we're at right now. We saw that intersection beginning to occur out here, and we talked about it April 26th to the 27th last week. Maybe it was the 25th out here, and I said we got to watch to see how the market responds when that intersection occurs. Somebody was asking about the TBT or something like that, and look at how in this case here, price decided to go back up to try to test those lines out here. And now we're starting to see these lines here separate. We, in essence, had that test on Friday. We had that earlier this morning or last night out here. We had that test as we take a look at the and which way is it deflecting? It's deflecting lower. What does that say? That says that U.S. Treasuries, at least the 30-year Treasury, should be heading lower. Now, it's going to have to bust through a level of support. There's no question. There's some support out here. You can see the bulls try to defend this area in the 160-ish and, a quarter type range out here. You had a nice bullish reversal signal that occurred on April 27th, but it does say if those lows of April 26th get taken out. And at this stage here, my presumption is that they will. Then what you'll see is the completion of an A to B equals CD to the downside. And what that's going to do is that's going to give you a price projection inside of the Treasury, inside of the Treasuries here, Warren, of about 157.31. Now, I can tell from your question here that you're taking a look at the Treasuries and correlating it to the market to try to understand which way the market is going to go. So to the extent that you believe, as you wrote here, bonds up, stocks down, you must also believe bonds down, stocks up. Now, I'm not sure which side of the trade that you're on with regard to the markets or any of you that are listening here, but we just took a look at a Gartley buy inside of that. By the way, I'm short the market, but that doesn't mean that we don't come back and take it. I'm not short the Dow, though. That doesn't mean that we don't come back, and I've got stops in place. So whatever the market's going to do, the market's going to do out there. But that doesn't mean that we ignore different trading patterns and signals that are in front of you. You and I were always mining for these signals so that we can make better decisions out here. So at this stage, this chart here is telling me that U.S. Treasuries want lower price. And for those of you that absolutely believe and have conviction behind that correlation, looks to me like the Dow's going to go take out those highs. That will be its message. Steve Rhodes with TFNN. Right.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 95, S&P's up 13, NASDAQ Composites up 23 points. Another question that came in is asking if I would take a look at the U.S. dollar index and give some input on where that may be headed. So let's go take a look at it. Let's I could take a look at the current contract out here, but I think it's going to be best. The June contract is trading out 92.57. It is probably going to be better for me because of the data feed out here to really take a look at the continuous contract out here. So let's go do that, see what we can see out here. And okay, it looks like we had already looked at this maybe together some time back. Let's go. So here, what we're looking at, the reason why I say this, there was already a rectangular box out here. So what you and I must have done a while back is we took a look at the U.S. dollar index, and what we notated on this chart here was a consolidation. Now, a consolidation pattern is very helpful. In a consolidation pattern, you sell at the high of the consolidation, you buy at the or cover at the low of the consolidation. And as we can see right now, the U.S. dollar index is trading right at or very close to that bottom of the consolidation out here. Now, the reason why that's helpful is because when you see a break of a consolidation pattern, what you will typically identify, what you typically will get is a measured move equal to that consolidation. Does it happen always? No. But does it happen often enough for us to say, boy, that becomes your price target? The answer is yes. So if we are to see the U.S. dollar index take out the low from August 24th, that's a day that lives in each of our hearts out here, August 24th, and that price point is 92.50. And then what you could do to the downside, your price projection inside the U.S. dollar index takes you into the 84-ish type level out here, that measured move, that little yellow rectangular box that is on my screen. Likewise, just as when the U.S. dollar index got up to the highs here in December and got up into the 98 ish type area out here, and the bulls might have said, hey, this is great, price is going to go ahead and take out those highs. Well, it didn't take out those highs, right? And instead, so, you know, from the bearish standpoint, if you're bearish U.S. dollar index, which says you could then be bullish commodities out here, right? That might be your play at this stage. This says, boy, you're at a very close tipping point out here, and you really need to be watching the U.S. dollar index, because this is at a place where the U.S. dollar index could turn. And if it turns, it's likely it can't bust them down. It's likely going to go ahead and try and bust them the upside and get to the upper piece of that consolidation. There's a question: did we just finish an A to B equals CD in the U.S. dollar index? And the answer is yes and no. Danny, it's a great question. We'll take a look at what Danny is referring to. And you can see several A to B equals CD patterns out here. The one that just the larger one that sticks out to me, let's go take a look at it, is the one that I'm drawing on my screen out here. And you can see that it extended beyond the 1-to-1 level out here. That doesn't, but is that the A to B equals CD, Dan, that we were talking about? Or were you taking a look at, maybe you were taking a look at, maybe this one right here, the smaller one that's out here? I mean, there are A to B equals CDs to the downside inside the U.S. dollar index, that they're all over the place out here. In order to complete an A to B equals CD, just like you and I looked at on the Dow and came up with the Gartley buy pattern that completed, confirmed on Friday, double confirmation as we speak today, you have to have some type of bullish reversal signal out there. If I were to say, go buy every A to B, go buy or sell the D point of every A to B equals CD pattern out here, you'd get crushed. You would just absolutely, you would say, what the heck? You wouldn't even use the word heck is with that pattern, because it doesn't work. It works lousily, not even a word out there. The reality is, prices, the prices will continue lower until you see the bulls run in. You have to see a bullish reversal candle. And it is more important. It is mucho grande important when you are completing a pattern out here. That includes this consolidation, right? That includes this consolidation. Look at the top of the consolidation out here, right? Here's the key session. The trading day of December 3rd out here. That was a key reversal, big old huge bearish engulfing. It told you that the move to the upside was done inside the U.S. dollar index. Back here, you had a nice little piercing candle back here on August the 25th, right? This candle pierced more than halfway into that down bar out here. That was a bullish reversal signal as price came back to the bottom of that consolidation. So the answer is, has it completed the 1-to-1? Yes. But does that mean that it's a buy? And the answer is no. So I hope that little nuance, which is the most important nuance, if I could share one thing with everybody that was a technical analyst, a pattern recognition analyst out here, it would be know your P's and Q's. No, it would be know your candlesticks. Know the ones that are most important out there and apply those to the patterns that you're using, and you will do so much better. You will improve your trading immensely out there. Does that mean that you will sell the top tick? It means you won't sell the top tick. Does that mean you will buy the bottom tick? No, it means you won't. But you won't. At least you will know that you've got some friends that are defending your position out there, and it becomes a pretty easy place for you to take a look at where that first stop needs to be. So the U.S. dollar index right now, all that we know as we speak right now, it's at the bottom of the consolidation. If it busts through this area, it's headed lower. It's headed much, much lower out here. Otherwise, it's up against a very significant level of support. And let's take a look at the continuous contract for the U.S. dollar index out there. Let's take a look at some individual stocks here that are moving. Let's take a look at Amazon and Chipotle. They're moving to the upside. Amazon is up $24. That's up. And we took a look at that trend line that Amazon traded down into off of its earnings date out here, and then came out with earnings on Friday, and then bing, boom. Big move to the upside, 10 million shares. You had big volume to the upside out here, moving right into the gap that you and I identified out here, right? We said if Amazon is going to move higher, you and I took a look at where is it likely that it's going to move to, where it's going to find resistance. And you and I came up with two levels. We came up with 650, 772, which, by the way, that's where it really gapped up to almost right from the get-go last Friday out here. It closed inside that level with volume. Now, the volume, that comparison we were looking to was the down day on January 4th. That only had 9 million shares, and it was up on Friday with 10 million shares, right? So that said it was going to go test the gap. It has now repaired that window. That old line of resistance, unless we see a sell-off here at the end of the day in the next couple of hours out here, it needs to get below 675.89. Then you would have a window of resistance, 675.89. Otherwise, you've got Amazon moving into a swing point from December 29th, and it's going to be kind of hard to correlate the volume there, right? Because that was 5 million, that was 5.7 million shares. You're at 4.5 today, likely to do more or about the same as that volume out there. Nonetheless, price is going to close inside there today, and that says that Amazon is going to go test that high. And that high, by the way, is 696. Just like driving to Detroit down highway is not even called high, is it? I don't think it's highway, it's just 696 out here. Is going to go test that area, 696.44 to be exact, and that is on Amazon. Chipotle out here, that's up about 2%. What is Chipotle doing? I don't know until the chart populates on my screen. Looks like that was down around a swing point, so it's testing a swing point, and it's doing it from on light volume. That was 1.6 million shares to the downside. That's a January 12th level. It's been testing that. Now, today's actually, looks like today's the first test on light volume, but still has a little bit of trouble. It's got to get above 438.72. We're at 430 right now. Steve Rhodes with TFNN. I'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 96, S&P's up 13. A question that came in asking me, hey, how come I only focus on the Dow, not the ES Mini and the NQ today out here? And the answer is because that's where the best signals were coming from. As I scanned the charts early this morning, there were only two places where there were three places where I was getting signals as to what the market is doing at the present time. Those three were in the Russell 2000, in the futures contract, in the Wilshire 5000, and in the Dow. In the Dow, we focus on because right now it's just the easiest one for everybody that's playing the home game to pay attention. There's no volume, by the way, inside this bounce, inside the Dow, but that doesn't mean that prices can't move higher. If we take a look at the Dow Diamonds as an example, on Friday, the Dow Diamonds were down, clearly down with 5.4 million shares. Now, that was going into 5.4 million shares. So it's not as if the Dow was really falling apart on Friday, right? The 5.4 million shares to the upside, that was the April 13th level, and that was the gap, and that, by the way, held, right? So there's a level of support that was tested with similar volume. What does that say? That says, hey, you can easily get that consolidation. It's why you can conclude that prices could go ahead and at least get back to the April 20th high out here. If we go ahead and we turn on our market profiles, see what information we can glean from here, well, we can see that right now price came right down into a level of support, the daily support area out here. And inside the Dow Diamonds, this says that price ought to run to about the 176.17 level at 170. Oh, wait, we're at 178. That's not correct. It ought to move to 178.80. There you go. 178.80. You have both a weekly top of the box, top of that weekly market profile, and you have a daily point of control, the center of that box, both at that same level. That's where it ought to find resistance. You get above that, 179.32. But more likely than not, what we're going to see here before the morning is we'll find out if there's any kind of reversal inside the futures contract. And the futures gave us a nice bottoming signal Friday at noon. And I didn't get those same types of signals if I were to take a look at the NQ from a 30-minute chart. And so therefore, I just really, to a certain extent, neglected it because there was just nothing that was getting data out here that said, not until about right now, quite frankly, has there been any reason to focus on it. Why? Because if you take a look at this really wide profile out here, see this really wide box, the top of the red, the bottom here, the black here, and see how just right now, in the last half hour, where price is now broken. But there are some other profiles that formed here, right? But these were all inside this larger box out here. So now is the time maybe to start paying attention to the NQ and what it wants to do out here. But we're not, in other words, as I said, I'm short the market with stops in place. And paying very close attention to what the Dow wants to do out here. As I mentioned before, we don't have that advanced decline oscillator above zero, so it says, hey, still maybe a little bit suspect. If I take a look at top performing issues inside the Dow right now, you've got Goldman Sachs, that's the leader, percentage-wise. Well, actually, Home Depot now just jumped into first, 1.5% versus 1.48 for Goldman Sachs. And to the downside, you've got Apple. Now, in the case of Apple, this is kind of interesting. So what's the worst performer doing out here? Well, Apple had moved down, has not tested the exact low from August 24th. That price point, by the way, is $92 even Steven. Huge volume, 162 million shares out there, but it moved down there with light volume on Friday, even on the trading day here of April 27th. And the last time the price was down here, down testing that area, it never tested on January 28th. There were 55 million shares, and the price point there was 92.39. And today, this morning, you had price get to 92.40. 92.40 versus 92.39. So it missed it by 1 penny. Almost doesn't matter. It's a light volume test. It's a rejection of these lows out here. And that says, well, then the Qs could bounce too with the weighting inside of Apple. Folks, stay tuned. Our man David White's going to be up next. Thanks so much for being here. After that, you've got the Tom O'Brien Show from 3 to 5. I'll see you on terrific Tuesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.